So, Al, in this last segment here, I want to talk a little bit about the interest rates. You mentioned that, I believe it was in the first segment, about how that's impacting the stock market, the economy of the country, essentially.
Right.
Now, the 10-year yield has been pretty much on a tear lately since February of 2020, right around 1.6, we'll say roughly. Now, how can that impact the interest rates? How can that impact the stock market moving forward?
Yeah. Well, it all gets down to risk reward. People want to get the greatest reward with the least amount of risk. Right now, the reward isn't there with bonds, with the treasuries.
Mm-hmm.
It just isn't there. So the stock market really has been the only place for people to go to get any kind of decent return. The concern for the stock market is if the yields on the bonds get high enough, if we get over like 2%, between 2 and 3%, well, that makes the bonds a little more attractive because they're basically risk-free. If you hold them to maturity, they're risk-free, and then people are going to rotate out of the stock market. So as long as the interest rates stay low, the stock market is the place to go. When inflation starts to kick up and rear its ugly head,
Which it has been.
which it has been. I mean, we talked about some of these commodities and how high they have gone. We've also got wage inflation. Well, when that happens, then you're going to see the yields on those bonds go up, and there's going to be a rotation out of some of the stocks into bonds. So that's the real impact that it has on the stock market.
You're right. And just looking at a chart here, and by the way, we make all of our decisions based on a price chart. We're looking for
Right.
supply and demand. I mean, potentially this 10-year yield, I mean, it could go up to the 2.1 area roughly, but there's a little supply area there. So, and I mentioned a couple of new terms here: supply and demand.
Yep.
Why, our sponsor, Online Trading Academy, has a proprietary strategy that's designed to teach you to make better investing decisions, right? Now, it's based off of supply and demand. We've talked about stocks today, big time. We talked about all the different tech stocks. And supply and demand is really what rules and moves all these companies. Explain that for our listeners.
Yeah, well, the important thing, the real important thing, if you want to be a consistent trader, if you want to have the potential for success on a consistent basis, is the proper entry price and the proper exit price. And that proper entry price, you want to be a low-risk entry that has a high profit potential. I mean, your reason for being in the market is to get a return on your investment. And if there's a way of increasing that potential return, that's something that should be important to you. And that's based on the proper entry price. The proper entry price is going to determine the quality of your protection, so you're protecting your investments if you're wrong, but it also is going to identify the proper realistic profit target, so you can protect your profits. So that is going to be based on supply and demand. That's one of those things that is a fact that can't be argued in any financial situation. If there's more demand for something, price will go up. If there's more sellers, price go down. In the financial markets, we're just talking about buyers and sellers instead of demand and supply. So, but it's got to be done in a large enough quantity to actually move the price, to be able to see the movement on a price chart. And in these classes, we talk to you about how we do that. We show you how we can use a price chart and use that supply and demand relationship, the buyer-seller relationship, to identify a quality entry price, or maybe even as important, a price where you don't want to get in. If you can identify trades or investments that are bad, that violate some of your parameters, maybe your risk level, any of those things, if you could be told not to get into something because it's a bad trade for you, would that help you? Well, one of the things that we'll talk to you about in the class is a platform that we have, a trading analysis and decision support system called Click. If you try to put a trade or investment together and it violates, let's just say that you have a risk limit, you're willing to risk $100 on any individual trade. If you try to put together a trade that exceeds that, you're going to get a warning that says, hey, you're exceeding your risk level. It keeps you out of your own way, keeps you out of trouble. So that's a platform that we will talk about. It will show it to you in the class, but it utilizes our core strategy, which is a foundational investment strategy utilizing supply and demand created by the big players in Wall Street. I mean, who's successful in the markets? Who's always successful? The big firms, the Wall Street firms, Goldman Sachs, JP Morgan. Those are the guys that are out there trading every day, consistently. Probably with looking at Goldman Sachs, their trades are probably 90% of their trades every year are successful or profitable trades, which is pretty good. So if they are having results like that and they're willing to, without really knowing it and intentionally doing it, they're telegraphing to us the things that they're doing. So if we can just take that telegraphed information, utilize it by showing you where it is on a price chart, that's how you can basically just follow in their footsteps. You can't compete. You can't beat them. Let me say that. You can't beat them, so you might as well join them, because if you don't, you'll be trading against them.
Yeah, and the markets are actually pretty simple. The concept is it's an exchange of capital from the people that don't know what they're doing to the people that do. And you mentioned Goldman Sachs; they're almost always profitable, millions and billions of dollars, over the course of time. And you have to have a strategy that has a set plan, set rules within that plan, but also you have to be able to execute it. And that's, I'm glad you were mentioning and talking about the strategy, but also the platform Click. Mm-hmm. And with the platform, and just to kind of give an example of how trades are actually made. So you were talking about platforms earlier as well. You basically set your entry point. So say you want to buy, let's just say hypothetically, somebody wants to buy Apple. Apple is roughly around, I forget what it was at, $127 a share. Mm-hmm. Say you wanted to buy it. Say you think there might be some demand at $125. You place an entry point, and that's where you want to get in. You place a target. So let's just say, I think it's going to be in, go up from 25. Let's just say to 40. Mm-hmm. Okay. You place your target at 40, and you also place protection to minimize any losses. So let's say you place your protection at 24, 124. Right. Mm-hmm. So if you're wrong, it's a small loss, but your winners are much larger. And that's when you have that strategy. It's a set rules-based strategy for those decisions. But then you're doing that without emotion. Yep. You have your entry point, your target, and then there's no emotion. The platform executes it for you automatically. Mm-hmm. It will get you into the trade automatically.
Yeah. How comfortable would you feel if you put a trade together, then you decided to go out and play golf for the day and not really have to worry about your trade? Because if you're wrong, your investment's protected because you have a stop loss set. If you're right, your profit is protected because you have your target set. And if you're wrong on the entry price, you're just not in the trade. So it really takes the worry, the concern out of it, just knowing that you're protected regardless of what happens with that particular trade.
Yeah, and that's the number one thing. Be protected no matter which way the market goes. The stock market could continue to go up. We don't know. It could go down. We don't know. But
it will.
It will.
Up and down.
Up and down.
So yes,
right?
Yeah, right?
But, we talked about earlier with correlations. I mean, you look at the U.S. dollars it's roughly about 89.76 right now. And based off of looking at the chart on supply and demand, it's at the lows from February of 21 and also February of 18. Potentially, if that continues to go down, the U.S. dollar, with the correlation there, that could catapult stocks. We don't know if that'll happen, but that's going to be a very important factor here to potentially look at. So understanding other correlations, other assets might help your decisions with the stock market. And Alice, getting close to the end of the show, and we have a lot of listeners that want to get started trading and investing. They want the rules, they want the tools, but they want protection from inflation as well. Al, you do a great job every single week with some wisdom. And you always, it really brightens people's day, especially on a Saturday, especially on a Sunday, but throughout the week as well. Let's hear them today.
Okay, well, these are really more words of encouragement than wisdom, Josh. Online Trading Academy, our sponsor, has spent the last 24 years fine-tuning and adding to their financial education experience. That's 24 years of actions that are devoted to student success. That's devoted to providing knowledge, building the skills to use the knowledge, and then providing the tools, resources, along with unlimited access to ongoing education. It's all designed to increase your confidence and comfort in making trading and investing accessible really to everybody.
You're
And,
right.
and I think let me just finish with this.
Sure.
You want to call them words of wisdom?
Let's hear it.
Stop being afraid of what could go wrong and start being excited about what could go right.
You're right. I mean, think of that. 24 years. I believe it's our 24-year anniversary, I believe in 2 weeks. And that's phenomenal. And that's one of the things is having the support around you and there's many, many people to help you with that. As always, same time, same place next week. Until then, retire young, my friends.